It's trading. Today, I want to talk about a few things. I want to talk about PE ratios, how China and Taiwan could end the AI boom, and I want to talk about the S&P 500. But before I do all that stuff, hit that like and subscribe button for me. Show the channel some love. Check us out on Instagram at Black Edge Trading. And also, if you'd like to join our free trading Discord, I'll put the link below. We're at Black Edge under Discord. You just download it to your phone or go to discord.com and search for Black Edge, and you'll see our symbol. It's free to join. We trade it every day. A lot of gems are dropped in there. We also have educational courses for people who want to learn how to trade or invest. People who have been trading or investing, we have courses for you available. We also have one-on-one coaching and consulting. So check us out. All right, let's get to it. P ratios. What is a P ratio and why is it important? So basically, P ratio just shows what market participants are willing to pay for a stock based on its past or future earnings. High P ratio could mean that the stock is relatively high compared to its earnings and could be considered overvalued. Low P ratio could mean the opposite. Low P ratio can mean the stock is undervalued or just not performing well or just not a good industry. So sometimes you end up in things like that. 1 second, I'm just closing out a trade. All right, we got that taken care of. Sorry about that. So let's look at the P ratio yields over the last 10 years. See where we at. Where could we possibly be going? So right now, our P ratio is S&P 500 is around 20, which is not bad. Historically, I think the average is around 18. You've seen we've had lower P ratios, and we've done just fine with P ratios above 18. But if you see right here during COVID, after interest rates were lowered, P ratios almost doubled up to 39 in December. So that was high speculation. We're down to a decent number right now at 20. So I would like to look, going forward, maybe this could be the turning point where we've been in a sell-off on the S&P 500 where stocks could possibly turn around or the sell-off could slow down and we could take a breather for a second. P ratios have come down. You may have some investors that want to step back in soon, especially if those ratios get down to like 18. I'll be watching for investors to step back in. Maybe we catch another bull run. Definitely want to look into that. All right, let's move on to China and how China and Taiwan could possibly end the AI boom. Excuse me. So China's trying to get their economy back rolling after they've opened for COVID. And I know people are still talking about COVID, but I don't understand why, but I guess it's still out there. So China's talking about, they reopened. It didn't happen how they wanted it to happen, so they had to lower interest rates to try to stimulate the economy, to try to get their people spending. But if they keep lowering interest rates and the economy's not responding, tensions between them and Taiwan are tightening up. And I know a lot of countries can stimulate their economy by going to war because then the government's forced to put money into the economy. So that could possibly be an option. If they get under pressure, I would definitely keep an eye on this situation. They've been doing military drills around Taiwan. The U.S. did say they would back Taiwan. The reason I said this could end the AI boom is because Taiwan makes 90% of the world's semiconductors. NVIDIA gets their semiconductors from Taiwan. So definitely want to keep an eye on that. This could have a direct effect on NVIDIA if Taiwan is a war zone. So definitely want to watch that. Let's take a look at the S&P 500 before we close. You see, we've been in this downtrend. We broke below this trend. We're retesting it. We're finding some sellers right now. I believe we can move down to this lower level, which is 43.50, and then possibly move down to 43.30. Then have a gap fill and move lower to 42.92, or maybe this 4,300 whole number. So definitely want to watch that. We're just barely holding on right here. The volatility index is still over 17.5, which was my number. Where's the CBX? Let me see if I can find it. CBOE. Yeah, CBOE. Here we go. CBOE volatility index. So it's still above my 17. My level was 17.75. We're still above that. We're trying to hold on here. The higher the VIX goes, the lower the market would go. They have an inverse correlation. So definitely want to keep our eyes on this and see how this pans out. You can see back when COVID hit and the market took a dive, how the VIX spiked. This is prime COVID time right here. The VIX spikes, and then when it started to fade, the market came back. So definitely want to keep an eye on this, and see what happens here. If we can move higher into this 20 area, or up into the 25s and almost up to 30, we'll definitely have an aggressive sell-off. If it starts to fade and we come back down to 15 or 16, or to the lows, we'll have another bull run for a short period of time or an extended period of time, depending on what the VIX does. But definitely want to watch this. Hope this was helpful for you guys. We'll try to keep you updated on the markets and what's going on. Don't forget to hit that like and subscribe button. Please share this content. All right, guys. Later. Peace.